application?
Uh,
All you have to ask is yes or no.
No, Congressman.
All you have to ask
the
is yes or
OCC
no.
is an independent entity, and I would know, Congressman,
so that- I take that-
in
I take that as a
2006,
no.
You traveled to Venezuela
I
to lobby
take that as a no.
Chavez on behalf of
I
your
take that
donors,
as a
on
no.
behalf of your
You do
donors.
not want to answer
Gentlemen's
that
time is
question.
expired.
110
I take that
years
as
in
a
jail
no.
For a $7 billion
Gentlemen's
contract.
time
I'm
is
asking you to
expired.
do your
Ask the
responsibility
Secretary.
as Secretary of the Treasury.
Into a Venezuelan
You do not.
Mr. Meeks,
Will you?
time has expired.
You
No,
cannot
you
erase
told the
what you
witness,
did in
He's the one that went
2006.
past your time, Mr. Chairman.
No, and
he did not answer my question, and he went
Order,
past the
Mr.
time.
Meeks. He had 6 seconds left to try to answer your question, and the
It was
time
a yes or
expired.
no. It was a
This may look like a heated exchange inside a routine committee hearing, but it's actually a stress test of regulatory independence. What's really being tested here is whether financial oversight can remain insulated from political power when transparency is inconvenient. This raises broader questions about how conflicts of interest are identified, paused, or ignored when authority is divided across institutions. In this video, we'll break down how moments like this expose the limits of congressional leverage, the safeguards meant to protect public trust, and what happens when responsibility is deferred instead of answered.
Secretary Bessent, if I'm not mistaken, you were working in the financial service industry during the late 1980s, correct?
I was.
Thank you. And well, I'm wondering, do you recall or you're knowledgeable of the Keating 5 scandal back then?
Yes, sir, and I will point out that I was.
I don't want to.
No. I will point out that
Limited time. I have limited time.
I identified.
Gentleman,
my
Mr.
time.
Secretary, it's the gentleman
I
from
just
New
asked
York
you a
Times.
question. So I just want to make sure that everyone knows, who doesn't know, that the Keating 5 scandal involved 5 U.S. senators accused of pressuring the Federal Home Loan Bank Board to expedite and give more consideration to the case of Charles Keating Jr., who ran the California-based Lincoln Savings and Loans. It led to a 14-month investigation unveiling how 5 U.S. senators and staff ended up with more than $1 million in contributions, 4 trips to the Bahamas, and all expenses paid stays at resort hotels. Following the scandal, the industry saw sweeping regulatory changes that was launched by then-President George H.W. Bush. Now, Mr. Secretary, I'm sure you can agree conflicts of interest and improper influence by U.S. elected officials over bank regulators weaken supervisory independence and ultimately impose massive losses on consumers and taxpayers. I think that we can all agree upon that. And as we know, the basic lessons from the post-Keating reforms still applies today when the Office of the Comptroller of Currency, the OCC, is deciding to get a bank charter. I think we can stimulate that. Now, Mr. Bessent, as our nation's treasurer, I'm sure you also know that a foreign-linked investment firm tied to the United Arab Emirates government quietly bought about half of the Trump family's crypto company, World Liberty Financial. And at the very same time, the President of the United States was dealing with that country on foreign policy. Now, Eric Trump, the president's son and co-founder of World Liberty Financial, said, and I quote, "I'm not going to get into who the investors are, but I've got some pretty meaningful investors," end of quote. Lack of transparency. And it didn't end there. When Trump fans brought the tokens, they thought they were getting the deal of a century. But what they didn't know was that only Trump and his sons had the sole power to decide who can sell the token and when. Today, the price of the token has fallen over 50%, and the Trump fans who bought the token are now begging to get out. Now, I'm not making this up. I'm not making this up. You can see it for yourself on the World Liberty Financial Discussion Forum, yourself, Mr. Secretary. So this is no longer just about a shady crypto deal or a possible gift when a foreign-linked investor is putting hundreds of millions of dollars into a company controlled by the president's family, and at the same time, this president is conducting foreign policy with that country. You know what that causes or creates? It creates a national security concern. So I'm not going to ask much of you, Mr. Secretary. I just want to know whether you will commit today to pause and heighten the scrutiny of any bank charter or licensing application at the OCC connected to the World Liberty Financial until all of these conflicts of interest and foreign influence reviews are completed and shared with the United States Congress. All I need to know is, will you halt it and do a complete investigation and scrutiny of this licensing application? All you have to ask is yes or no.
No, Congressman.
All you have to ask
the
is yes or
OCC
no.
is an independent entity, and I would know, Congressman,
so I take that as a no.
you traveled to Venezuela
I
to lobby
take
Hugo
that as a no.
Chavez on behalf of
I
your
take that
donors,
as a
on
no.
behalf of your
You do
donors.
not want to answer
Gentlemen's
that
time is
question.
expired.
110
I take that as a no.
For a $7 billion
Gentlemen's
I'm
time is
asking you to
expired.
do your
As
responsibility
Secretary-
as Secretary of the Treasury.
into a Venezuelan.
You do not.
Mr. Meeks,
Will you?
your time has expired.
You
Well,
cannot
you
erase
told the
what you
witness,
did in
He's the one that went
2006.
past your time, Mr. Chairman.
No, and
he did not answer my question, and he went past the
Mr.
time.
Meeks. He had 6 seconds left to try to answer your question, and the
It was
time
a yes or
expired.
no. It was a yes or no answer. I asked him, will he? No, it was
Gentlemen,
yes
the
or
chair
no.
recognizes
OCC
the
is an
gentleman.
independent
Stop
Mr.
covering
Bessent.
for the president.
Yeah, well,
Stop being his flunky.
yeah, and
Gentlemen.
He's talking to me. I'm responding
your
back to him.
2006 trip to Venezuela.
Neither
Why
one-
don't you-
Stop
why don't you
covering
tell
for
your
the
Secretary
president. Don't be a
about
flunky. Work for the
Mr.
American
Secretary,
people.
Mr. Meeks.
Trip to
Mr.
Venezuela.
Meeks.
Work for the American people.
And maybe
Don't
you're
be
going-
a
maybe you're
cover-up
going to-
for a mob.
Maybe you're going to
As
see your
long as he
friend
talked,
Nicholas
you'll talk.
Maduro
I will.
in
Gentleman is
Brooklyn
not
prison.
recognized. Mr. Bessent, please. I recognize the gentleman from Texas, Mr. Sessions.
What unfolded in this hearing was not a routine exchange of questions and answers. It was a moment where history was deliberately pulled into the present, where the past was used as a mirror, and where the room itself seemed to strain under the weight of unresolved accountability. When Congressman Gregory Meeks invoked the Keating 5 scandal, he wasn't reminiscing. He was warning. He was drawing a straight line from an era when unchecked influence corroded public trust to a present moment that, in his view, carries unsettling echoes of that same failure. Meeks carefully reconstructed the facts. 5 U.S. senators. Pressure applied behind closed doors. Regulators pushed to look the other way. Generous contributions, luxury travel, preferential treatment. And the result was not abstract. It was systemic damage paid for by ordinary Americans who had no voice in those rooms. The lesson of that era was supposed to be permanent. That conflicts of interest weaken oversight, that political pressure distorts judgment, that independence in financial regulation is not optional but essential. And yet, as Meeks laid out his case, the question hanging over the chamber was not about the past. It was about whether those lessons had truly been learned. The congressman then turned to the present, to a modern financial landscape defined not by savings and loans, but by digital assets, opaque ownership structures, and global capital flows that move faster than regulation can easily follow. He described a foreign-linked investment firm tied to the government of the United Arab Emirates acquiring a substantial stake in a company controlled by the president's family. He pointed to the timing, the overlap, the silence around who exactly the investors were, the lack of transparency. Not as speculation, but as publicly reported facts. This was not framed as a partisan attack. It was framed as a question of standards. What happens when private financial interests intersect with public power? What happens when those interests involve foreign governments while diplomatic relationships are actively being negotiated? What happens when those structures exist in a regulatory gray zone shielded from public scrutiny? Meeks didn't stop there. He described how supporters who purchased digital tokens associated with that enterprise believed they were participating in opportunity, only to later learn that control over selling and timing rested exclusively with insiders. He noted the steep decline in value. He pointed to public forums where buyers now express frustration and confusion. And again, his argument was not about market volatility. It was about information asymmetry, about who holds power and who bears risk. At that point, the hearing shifted from exposition to confrontation. Meeks asked a direct question of Treasury Secretary Scott Bessent. Not a rhetorical one, not a philosophical one, a procedural one. Would the Treasury commit to pausing and intensifying scrutiny of any bank charter or licensing application connected to this enterprise until all potential conflicts of interest and foreign influence reviews were completed and shared with Congress? Yes or no? It was a moment that demanded clarity, a moment designed to test whether oversight still carries weight when the stakes are political. The answer did not come. Instead, the response emphasized institutional boundaries. The independence of the Office of the Comptroller of the Currency, jurisdictional limits, process, structure, all valid concepts in isolation. But in that moment, they landed not as reassurance, but as deflection. And that is when the hearing descended into disorder. Voices overlapped. Time limits were invoked, accusations flew, the language grew raw. Meeks accused the witness of avoiding responsibility, of shielding power rather than challenging it, of forgetting who the system is meant to serve. The chairman attempted to restore order. The gavel moved on, the moment passed. But the question did not. Because beneath the raised voices and procedural wrangling lies a deeper issue that cannot be silenced by time limits. When institutions emphasize independence without accountability, who benefits? When officials decline to intervene in the name of process, even as credible concerns are raised, what message does that send to the public? And when history offers clear warnings about the cost of inaction, is neutrality still neutral? This hearing revealed more than a clash between a congressman and a cabinet official. It revealed a tension at the heart of modern governance, a system designed to prevent interference, yet often criticized for failing to act. A structure meant to safeguard fairness, yet vulnerable to influence that operates just beyond its reach. A promise that lessons have been learned, tested again and again by new forms of power. Meeks's invocation of the Keating Five was not accidental. It was a reminder that scandals are rarely sudden. They are built quietly through unanswered questions, deferred scrutiny, and an over-reliance on assurances that everything is being handled somewhere else. History does not repeat itself because it wants to. It repeats itself when vigilance fades. Secretary Bessent did not admit wrongdoing. He did not endorse the accusations. But in refusing to commit to heightened scrutiny, he became part of a larger pattern that concerns many Americans. A perception that accountability is optional when proximity to power is close enough. This is the space where trust erodes. Not through dramatic collapses, but through moments like this. A yes or no question unanswered. A warning acknowledged but not acted upon. A system that moves forward even as doubts linger. Democracy depends not only on laws and agencies, but on courage. The courage to pause, the courage to investigate, the courage to accept that transparency is not a threat, but a safeguard. Oversight is not hostility. It is responsibility. As this hearing shows, the struggle for ethical governance is not settled. It is ongoing, and it requires more than speeches and procedures. It requires attention, engagement, and a public unwilling to accept silence where clarity is owed. If you believe these moments matter, if you believe history should guide, not haunt, our decisions, then stay informed, stay engaged, and support our work to expose the truth. Subscribe to Liberty Report USA.